Hey everyone, good afternoon. This is James. Oh my goodness, I hate when this happens. We are here today. It is 11 a.m. See, 11 a.m. Friday, February 3rd, 2017. What we're going to go over today is something very simple, something very easy. It may be confusing for some of you, but I'm going to give you a quick crash course on what it is that we're doing. Just to give you an idea. Make things simple. Let's get out of there. I use Thinkorswim because I find it's the easiest for me. It has all the perks I'm looking for. To this date, it is the only trading platform I have found that has what's called the trigger trade. Now, I'm going to show you exactly what that is and how do I find the trades that I'm going to be doing and I'm going to be showing you. First, after we get out of here, first thing I want to do is come to the Market Watch. Click on Market Watch. You're going to come up with more drop downs. You have quotes, alerts, visualize, financing rates, and the calendar. I want to go right to the calendar. When you open it up, all these are going to pop up and it's going to give you a plethora of junk. Okay, a plethora of junk. So you look at it all. It doesn't make any sense until you know what you're looking at. Now I base all my trading around the dividend date. So all this stuff makes no sense to me whatsoever. So I get rid of it all. Okay, because I don't need to see any of it. The only thing I need to see are the dividends. Who is paying a dividend on what date? Okay, now today is the 3rd. Okay, so on the 3rd, there's 37 companies going EX to date. Today, that means if you want to qualify for any of these dividends, for any of these companies here, you would had to have bought it yesterday or any day prior to today. So if you bought it today, you won't be eligible for the dividend that is going to be paid whenever it is. Now, there's 4 dates to remember when you're working with dividends. There's the announcement date, the dividend date, the EX dividend date, which is the last day the stock trades before the dividend's paid out. And then they have the date of record, which is usually 2 trading days after the EX date. Okay, so let me quickly check to make sure I'm in focus here. Yep, I'm good to go. So let's get rid of that again and get back to where we were so you can find out what we're doing. And the last date is the payable date. That's when they actually send the check. Now, I've had conversations with people before saying, how do you find the EX dates? How do you find who's paying and when they're paying? Well, almost any financial website will tell you who's paying a dividend and when. Or you can just go to a Google search and search EX dividend calendar. Just put in the search bar, and then a whole bunch of websites come up that have a calendar showing you who is paying and when. Okay, so where you find it is totally up to you. But one thing I have found, not every site lists everyone. The NASDAQ lists a bunch. You have Thinkorswim, they list a bunch. You have Dividendium, Dividends.com, Dividend Guru. There's so many different websites that have what it is you're looking for. Find one you're happy with and stick to it. I do it right on the trading platform that I work with because everything's here that I need. If I want to find out who's who, I click on it. Little drop down box opens up. NEP is Nextera Energy Partners. Never heard of them. Do I really care? No, I don't. They're paying a dividend of 35 cents. The EX date, the announcement date was January 27th. Their EX date is today, and then on February 7th, right here, that is the date of record. So if I bought it yesterday, it had the 2-day settlement period, which would have been today and then Monday, and then Tuesday would be the date of record, and then that's when the accountant or whoever does the book say, all right, so and so owns this many stocks or this many shares on this date. They get this much of a dividend. That's just the way it works. You buy it before the dividend, the EX date, and you sell it after the date of record to collect the dividend. All right, so once we found out all the companies, okay, it's a bunch of them. What do you do with them? Now, one thing I dislike about Thinkorswim, I can't cut and paste this list. I can't right click, left click, I can't anything click to get this whole list and import it into my software. So unfortunately, I have to do it one at a time. Okay, so I do have other websites that do give me lists that all I have to do is just, cut and paste into the software, and it spits out what I'm looking for. So let me quickly show you the software so we can find out what we're doing. All right. Okay. Here's a piece of the software right here. The way to get to that is you actually have to be a paid member of the 10minutetrader.com. Go there, you become a member, and you have access to two pieces of very important software. Here's one right here. You can put as many stocks into this as you want. You insert it right here. You hit go, and this is what pops up. Okay, I just put these four in there for now. T is AT&T, Ford, Microsoft, IBM. You know who they are. What happens after that? This first line represents a portion of the dividend. This would be 50% of the dividend. This would be 75% of the dividend, and this would be 100% of the dividend. How long did it take, buying 10 days prior to the EX date, for this stock to hit the full dividend price that was at that point in time? So as you can see, the very first line, 2008, 50% of the dividend, it hit the first day. The dividend was actually 49 cents, see right down here. So if I wanted to quickly catch 24 cents real quick, boom, I'm in and out within one day. 75% one day, 100% of that, a 50-cent move, took 4 days to hit it. So I come all the way down here after going through all 10 years worth of data, and my average is right here. 8 days, 17 days, 18 days. Don't get me wrong. It's a wonderful company. It's been around for over 100 years. They pay a good yield. Let's see what yield they're actually paying. Okay, they're paying 4.6% yield. Okay, so if I'm stuck with this company, I don't mind keeping it 4.6%. That's like 4 times the amount any bank is paying on a CD at the moment. All right, there's 22 million shares traded on average day. Let's quickly go and see what the 10-year chart's going to look like. The link is already built in to go to the 10-year chart to see what this stock has done, or any stock has done for the last 10 years. Now, AT&T 10 years ago was at 39. Okay, and as you can see, this thing has a lot of peaks and a lot of valleys. It goes up, it goes down, it goes up, it goes down, up, down, up, down. She sank just like everyone else did back in 08, 09. Okay, 08, 09, the big financial crisis, everything dropped. This one dropped down to $23.77 at the low. And since then, she's going up, down, up, down, up, down, up, down, up, down, all the way to where she is now at 41, which is a little bit higher than she was 10 years ago. But do I really care about that? Yes and no. Because worst case scenario, if I'm stuck with the company, yeah, I'm getting 4% yield, but I'm also collecting, a dividend every 90 days, and the stock continues to go up. From the low back here in 09, or 08, 09, it's a nice increase from 23 all the way to 41. Now everything went down in 09, so am I going to use it against them? No. Okay, everything went down, everything went up. So here we are. It's at 41.35. Okay, let's get out of here. Go to the next one. The next one we're not going to do, which is Ford, because they've only had 5 years worth of data. I mean, granted, Ford's been around for over 100 years, but I don't like the numbers. There's a lot of volume. There's a good yield, and I don't know if I really want to chase. Well, 20 cents is not bad, but do I really want to chase it? Let's see. Everybody knows what the chart looked like on Ford. That big crisis and everything went down, and the stock went down. I think it went down to like $3. But let's take a quick look at the 10-year chart for Ford. 10 years ago today, it was at $7.89. At its low, it was $1.87. Can you imagine that? $1.87 for Ford stock? I mean, if they sold the real estate that they own alone, they can really recoup that. They have what's called the book value. The book value is actually liquidate all the assets. You take in all the income, and then you pay off all the debts. And after everything's said and done, that's the actual value of the company. That's the book value. You liquidate everything, and that's what you come up with. But at a low, $1.87, who would not have bought in Ford at $1.87? Ford's the only one who didn't take any money from the government during that big, huge crisis that they had. Anyway, 09 at the absolute low was 187. Now she's at 1259. That's 100%. almost 1,000% increase, which is not bad. Well, 5, 6, 7, 8, 9. I don't know. Don't know the exact numbers, but it's a pretty darn good hit from $1.78 up to $14. But like I said, there's only 5 years worth of dividend data, and it missed a couple. So I'm probably not going to do Ford. Then Microsoft. Everybody knows who Microsoft is. Billionaire Billy Gates, just sitting there counting his money, sipping on martinis all day long. Must be nice. But 10 years ago, check it out. 10 years ago, you could have got Microsoft. Come on, reset. Let's go. Could have got Microsoft at 27. Now she's at 63. That is a much better chart than AT&T. However, AT&T is not is paying a higher yield. See, Microsoft's only paying 2.4% yield. And the last one, I believe, was IBM. Okay, IBM is one of the few companies to have ones across the board, ones everywhere. You want your dividend, boom, you get it in one day. Look at that, $1.40 dividend. Okay, and it's still 3.2%. That's like a definite no-brainer. So let's quickly look at IBM and see what they've done over the last 10 years. Now, IBM is like one of the international business companies, like one of the companies that everybody uses as a trademark or a benchmark to measure everything by. 10 years ago, IBM was $94. Okay, in 08, 09, she bottomed out at, come on, move, there we go, at 81. That's not a whole hell of a lot of a drop, now is it? Okay, from 81, she's at 175, which is a little bit more than double its price. So IBM's another great company. I'd buy IBM just because I can get in and out in a day and reach my target price. Okay, so that's one piece of software. Okay, one piece of software showing you how to use that big list. You insert it and then you find the numbers that work for you. Again, I'm not sure about AT&T. You know, I don't want to wait 3 weeks. That's almost 4 weeks. 18 days, that's almost 4 weeks. Now, I say 4 weeks because there's only 5 trading days in a week. Okay? Monday, Tuesday, Wednesday, Thursday, Friday, 5 days. The average month is 22 days, 22 trading days. Okay, so 18 days, I probably wouldn't do that. So we're looking at AT&T because I'd like to hold it and keep it. But no, I want to get my money. I want to get out. So I probably wouldn't do this just to collect the dividend. Microsoft, again, it's a little iffy. But anyway, let's get out of here. Go to the other piece of software. Here's the other piece of software right here. And I want to show you a current one. I'm going to use, all right, CPPL. Let's put in CPPL in there. CPPL. Today is the 3rd. Plot the dividend. Now, the nice thing about this chart, whoa. Okay. Don't like that one. Something I know. My goodness, it's like ARLP. Let's try that one. ARLP. There we go. Now this is going to do 10 years worth of data also. Put one on top of the other, top of the other, top of the other. It allows you to see how it reacts directly related to the dividend date. This is the same thing you just saw a little while ago. Right here, all this is the same that you saw just a little while ago. Get out of there. All right. The first thing I want to do is I want to click on average, because that gives me the average of what it's done over the last 10 years. If you want to look at 1 year at a time, you just hover over it, click on it. That's what it did in 07. Okay, she comes in 10 days prior. Okay. The red dots represent the EX date. Okay. This software is meant to go from the EX date 10 days prior to, and then 90 days after, because it goes from one EX date to the next EX date. That's the only time frame I'm concerned with. Because I want to get in, I want to get out, I want to make my money, and I want to make the next move. Okay, so 10 days prior to would be right here. And this is what it did in 07. Basically, get in before the EX date, take your profit or hold it, and then the stock just goes up. 08, 09, 10, 11, so on and so forth. And just keep playing with it. Again, as a member of the 10-minute trader, you get access to the software. What else is neat about this software? Well, let's quickly go over this first. Okay, as you can see, this stock, the average, to take the 10 years, one on top of another, and you average all the numbers out. You know how to do that, so I no need for me to explain it. But it averages 10 days prior to, and she moves up, and then just before, 1 day to, she drops a little bit, it goes sideways, and then moves up. So what does it tell you? It tells you, yeah, I'm going to get my profit within the first 10 days. I jump out, or hold on to it. If I plan on hold on to it, I can plan on getting a nice little profit somewhere, 2-3 months down the line. But that's not what I want to do. I want to get in, get my profit, and then get out. Okay, what's the sense of holding it for 2 or 3 months to collect? What is the dividend on this? Hold on a second. All right, the dividend is 43 cents. All right, it says I could be out within an average of 7 days. That's about a week. Okay, so we're getting in the 10 days prior to. So before the dividend even comes up, I can collect the dividends amount, which is 43 cents. So if I get in 10 days prior to, get my 43 cents, I get out. I don't have to hold it. See, from the EX date, she goes sideways, but quite a bit before she makes the move up. The numbers on the top right, top left corner. See how it says 48 right now? Now 43, 41, 39. Those are how many days after the EX date. Oh, this is 32 days. Starts making its move 53 days. This is on average, so it's not an exact number. It's average over the 10 years. So do I really want to hold it for, 2 or 3 months for it to collect that 43 cents and then get back out again? No, I don't. If I can collect it in the first 10 days or the first 2 weeks, fine. In, out, thank you very much. Who's next? All right. Here again, the charts, it goes right back to Yahoo Finance, the exact same chart you saw a little while ago from the other software. That goes to the day chart. I don't want to see that. Year-to-date max, ARLP, that's not right. There we go. Gives you an idea what it's looking like. Something doesn't look right there. But anyway, I'm not worried about it at the moment. All right, so that's that piece of software. Now also, as a member of the 10-minute traders membership, you get this email to you every week, because I go through it and I actually do it for you. I actually put it into all the software that I have. I clip art it, I cut and paste it so you can see what the software is actually reading. If you don't want to do it yourself. So AMGN comes up top. It has options for the dividend capturing strategy. 100% of the time, if you buy it, you get in, get out, and look at the yield, 2.9. Kind of love it. Dividends on steroids, that's a different strategy, which I'm going to go over in a little bit. So I'm getting kind of sidetracked, but as a member, this is what you get access to. And you get this one, which is software I just showed you a little while ago, how each one fared with this software. See the yields, 3.7, 4.1, 4.19, 3.75, 2.3. There's plenty of volume in all of those. Look at the averages. You get 1.3, 2.3, 5 days, 3.7 days. Get in, get out in a couple of days, take your money and hit the high road. Thank you very much. Okay, also what you get in here is links to the videos. Dividend Kings. You click on the link, it goes right to the video, shows you who the Dividend Kings are, what they've done. But basically the Dividend Kings have 50 years of increased dividends. In order to be on that list, you have to increase your dividend to the investor for a minimum of 50 years. Okay, the Dividend Aristocrats, a minimum of 25 years. The Dividend Champions, a minimum of 25 years. Okay, so if you add this one and this one together, that's pretty close to 200 companies. Okay, 200 companies, just stick with those, and they have a minimum of 25 years of increasing their dividends. Okay, so if the whole thing goes to shit, or goes to pot, then at least you're getting your dividends increased every year with these companies. All right, the Dividend Champions, 125 companies, 25 years increased dividend payments. There's also other stuff here. Dividend capturing, we go over, slide down a little bit. We go over the weekly optionable stocks, same thing. Now these stocks right here have weekly options. Why do I like weekly options? Because it gives you more opportunities for profits. Okay, Delta Airlines, 3M, UPS, AMAT. Oh, I was just looking at them a little while ago. Anyway, a lot of them maybe household names. You know, you got Microsoft, you got Target, British Petroleum. You know, they all have weekly options. I love weekly options. Here again, weekly options, how they fare. You know, 3M. Look at 3M, 1.8 days. That's only 2 days. In, out, thank you very much. 2.5% if I hold it all year. But no, I want that $1.11 per share. You know, buy a couple thousand shares. It's a couple $1,000 and within a day or two. All right, got here. We're done there. All right. Good morning from California, Merv. How you doing? So let's jump right to where we were a minute ago. So after you put all of the stock symbols into this calculators, and the calculator tells you what's what, where we're going to go next. Okay, what we're going to do is I'm going to show you how to do a trigger trade. I'm going to use the very first one up on the list, ARLP, Alliance Resource Partners. Now, I'm not saying that I'm actually going to do this trade. I'm actually going to walk through and show you how it's done. Okay, and then we're going to go in and see how it actually worked. Because today's the 3rd, right? So 10 days ago, had you bought this, you would have gotten out on this yesterday, which would have been the 2nd. So we're going to go back real quick. 10 days from the 2nd would have been January 19th. So you get in on January 19th, you look for that 43-cent move, and then you jump on out. Okay, so let's see if ARLP actually did it. ARLP. Oh, let's go back. Show you what the whole chart looks like. Okay, so as of last year, ARRP starts out the year at 1327. Okay, comes down, hits a low right at the end of February, goes sideways for a little bit right into the first week of April, and then she shoots up nicely, hits a high right in. Now, I've been telling people this for a lot. Right at election day, the day after election day, you're going to find there's a few dates that are going to be very prominent or stand out. Election day is one of them. This company not so much because it looks like it's all over the place right around election day. All right, so we're jumping in at the 19th to see what this stock actually did. And here we go, the 19th. Now, I'll pay attention to these numbers up here because the O stands for the opening of the day, H stands for the high of the day, and L stands for the low of the day, C stands for the close of the day. And remember, we're only looking for 43 cents. Okay, she opens up at 21.90. So 43 cents would be 22.33. Okay, so how long did this stock take to get to 22.33? Okay, one day? No. Second day? There you go. It's a high of 22.37. So rather than buying it and holding it through the settlement period, because it's a 2 or 3 day period, you have to buy, hold for 3 days, and then you get on the date of record, and then they send you the check, and then you're susceptible to the stock dropping in the equal amount of the dividend, and then you have to wait for it to recover. This way the software points out, is it going to make it? How well it done in the past? So this one actually did from January 19th, you get in the day before, you put your order in the day before, so you open up the market. When the market opens up, you're already in the trade. I do that a lot. A lot of my trades are put in the night before because I really don't want to sit in front of a computer all day. I want to get it in, get out, make my trades, and be off with. What I'm going to show you now, next, is how I actually do that. All right, so we're only looking for 43 cents, right? ARLP, right click on it, and more info on ARLP, and I go right to trade right there. Click on that, and boom, she opens up. Now, it's already all right, let's get this out of there. Okay. Now, this is already set up for the type of trading that I want to do. What I do is I right click on the ask. This window pops open. I can buy, sell, custom, sell custom, blah, 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 all this neat stuff. I'm going to go to buy custom. Another window pops up, and these are saved trades that I have saved to do what it is I'm trying to do. This is my first one I like to do. The name of my ex-girlfriend. I should probably change that. Quickly go back, find how much I was looking for. I'm looking for 43 cents. Okay. Now, this already opens up And I'm going to go quickly to my calculator to figure out how many I can do. So let's go here. Let's go to my calculator. Let's say we want to do $25,000, 25,000. Okay, and we're dividing it by the stock price. The stock price at this moment in time is 23.40. See, the last trade was 23.40, so that's what price I want to put in there. 23.4. And how many shares can I get? I can get 1,068. Now I like to round off to the nearest 100. Reason being is that options trade in hundreds. Okay, so you really can't trade an option with 68 stocks. You have to have 100. So I'm going to do 1,100 shares. Okay, go back here, get rid of this number. I'm going to delete that. And 1,100. Come in here, delete that. 1,100. Okay, so I'm buying. See it? Buy 1,100, sell 1,100. This is stock. The market price. And the red one is the sell one is triggered by the first one. And here I want to trade this. I change this from 37. I want to change it to 43 cents because that's what I'm looking for. Now the first one, the buy order, I want it to be a market order for the day. Because what's going to happen as soon as I hit the send, it's going to put a market order. It's going to buy it right away. Okay. Then what's going to happen? It's going to automatically trigger the next one. Okay, plus the 43 cents that I'm looking for. That's how to do that. Quickly hit confirm. Well, confirm and send. This is what pops up. First order description, buy 1,100 at the market price to open. Then I want second order is to sell 1,100, triggered by an increase of 43 cents. Limit order, good till cancel, triggered by order number 1. Okay, what it's costing me, the buying effect is $12,818. The commission is $9.95, so grand total of $25,647. Alrighty. We're going to hit send. And this is just telling me I'm using money that I'm supposed to wait a couple of days for the one to clear, but blah. Okay, did you hear that sound? That means I bought them already. Now, quickly, let's go over here to the monitor. And look, the sell order is already there. You heard it go ding a second ago, and 2 seconds later, the sell order is already in place. That's freaking awesome. At least I think so. See, here's the buy order. Right here, bought 1,100 ARLP, stock at 23.35 at the market price. So 23.35 plus 41, that brings up our new target price, 23.78. Okay, that is the stock plus the dividend. Okay, is it going to make it? I don't know. It was just an example. So let me go back and show you how to set up your account to make that type of a trade. All right, let's go back to trade. This time I want to left click on the ask button. What that's going to do is that's going to bring up just a regular buy order. Here's the regular buy order down here, stock buy. It automatically defaults to 100 shares. It automatically assumes you're going to buy 100 shares. All right. Now, what I want to do is I want to put in a trigger trade. And I want the trigger trade to be the 43 cents equal to the dividend. So what I'm going to do is I'm going to make what is called an advanced order. Okay, I click on this little drop down box, and that's going to open this up. Okay, I'm going to be honest with you, I don't know what all these are. Blast all, I have no clue what that means. Single order, that's what we just did. We just did a single order. Okay, means just buy, just sell. No contingencies, no if this or that, nothing like that. Just a single order. That's what that is. The trigger trade is the first one. The first order triggers a sequence. Okay, that's what I'm going to show you right now. These other ones, a little bit more in depth, a little bit more advanced, so we're not going to bother with those. I just want to click on here. That's it. Just click. That's all you do. Then you bring the cursor down to the buy button. You right click on the buy button. Okay, and this little drop down window opens up. Now I want to create an opposite order. Click on that, and look, it's an opposite order. Okay, here I was buying, and here I am selling. 100 shares, ARLP, everything's still the same except for when you get down to here, the link. Okay, now remember I told you the first order, the buy order, you want to be a market order. So go back up to the first order, was the buy, the green. You slide your cursor all the way over to here, and you click on the limit. Okay, and this drop-down box opens up. Now all these have a certain meaning. Okay, market, which is buy it for whatever the market now is selling it for. A limit order, which is this is all I want to pay for it. A stop, which you really can't use when you're buying. On stop limit, you really can't use that when you're buying. Trailing stop, really can't use that when you're buying. This one you can't use when you're buying. MOC took me a while to figure out what this one is. That's market on close. Okay, market on close. And that could be a limit on close. I don't know what the L stands for. Really don't. Do I ever use it? Never. I never want you. I've been trading for over 25 years. Never used it. I never used most of this stuff. I use market, limit, stop limit, trailing stop. All right, anyway, we're going to change it to market order. Okay, so your first order should say stock, buy, however many shares, what the stock symbol is, and the price. It's the market price. And the order is market order, and it's good for the day. And you want the best price available. Okay, so the second order, this is where the trigger comes in. It's already set up for stock, sell, the exact same amount you're buying, you're selling the exact same amount. Stock symbol is the same. Here's where you go to change it into a trigger trade. You click on here, and a drop-down window is going to open up. Okay, now again, all these can be inserted. Okay, I'm using the trigger trade. First thing that pops up is movement, up or down. Okay, with the plus, I want the stock to move up. How much do I want it to move up? I want it to move up 43 cents, 0.43. Okay, that's equal to the amount of what the dividend is. If it's a 10-cent dividend, you change it to 10 cents. But you got to make sure you have the plus or minus, and it says plus whatever you want. Because if you click this again, okay, that's used for trailing stock because it follows the stock as it moves. The next one, is percentage. What percentage of move do I want? Do I want, 0.5% of a move, a 1% move? It gets a little confusing. I just want what's equal to the dividend. So let's get back to the dividend, and it's 43 cents. Okay, so my 43-cent dividend, and I want it to be a limit order. Okay, and then I want it to be good till cancel, or extended, which means after hours or pre-hour trading. Good till cancel with extended hours. All right, that's what that means. I hit confirm and send. Before I do that, I double check to make sure I entered it in properly. First of all, I just want to let you know this is a simulation. It's not a real trade. This is just hypothetical. I do this because I trade 5 or 6 different trading accounts, and yes, even after 25 years, I still practice with my paper trading. So, with that being said, to show you how this works, it's all the exact same. I suggest you do paper trading before you do real live money trading, because if you get good at this, then you'll be putting your real money in. Okay, you're buying 100 shares, RLP, market to open. That's opening the order. Okay, simultaneously, you're going to be closing it. Okay, the sell order. Sell the exact same amount of the exact same stock, triggered by a 43-cent increase. Limit order, good till cancel, with extended time, triggered by the first trade to close a trade. How much is it going to cost me? It's still costing me $10. Okay, dollar-wise, it's cost me $1,100, but the cost of the trade with commissions is $23.47. All right, well, now listen closely, because I don't even think I can get to the next screen before the sell order occurs. Okay. Yep, there's the buy order. Let's go to monitor, and look, the sell order's already there. I couldn't type it in fast enough. If I was going to do it manually, I couldn't do it fast enough. Now, let's say, for instance, you wanted to use a limit order for your purchase. So let's do a limit order. Let's go back to trade. Let's do the same thing all over again, but this time I'm going to go back to custom to where I already set up. Okay, Now, let's say perhaps I don't want to use the market order. Let's say I want to use, it's at 23.37 now. Let's say I want to buy it at 23.30. Okay, I can go here, I can do a limit, okay, and then I can change it. Whoops. To 23.30. So I want to get in at 23.30. And my exit would be 23.30 plus the 43. Now when I hit confirm, it's going to be basically the exact same trade that I just did. However, it's not going to automatically fill. Okay, let's go back to monitor and I'll show you. Okay, here it is. As you can see the times right there. Look at this. Sell ARLP to close 11:34 with 32 seconds. When did I buy it? 11:34 and 32 seconds. It's instantaneously. I buy it and instantaneously I'm selling it. It's like you can't type faster than that. Buy it, sell it. No, it doesn't work that way. That's why I like to use the trigger trade, because here, in this example I'm giving you right now, I just did this trade just right this second. 928 shares to open ARLP. I really don't want to do this because I don't want to own that many of this company. What do you call it? I don't want to pay more than $23.30. See that? And then when I do, I want to sell it 43 cents more than I paid for it. Okay? And what is it doing? It's working. You know, right here, it's working, and it's waiting for the trigger. That's what it's doing right now. That's how it works. So I can walk away from this, okay? And who knows, at noon, at 1, 2, 3, 4 o'clock this afternoon, tomorrow, the next day, then, well, actually, no, not the next day, because this is a day order. I could change it to a good to cancel order, so it buys it whenever it hits that price. There's a lot of things you can do. The stock is going to move. The software says so. Hey, let's get in. Let's make a trade. You know, you can choose your order. I mean, the price you pay by a limit order, or you can just buy it for the market order. Get in, get out, just leave it alone. Eventually, what's going to happen is as soon as this buys or sells, Thinkorswim is going to send me an email saying, James, you sold something, cha-ching, you made money. And guess what? It gets forwarded to my phone, you know? And then you get that money, 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 that whatever ringtone you use for when you get an email alert. But that's how you do it. I want to make this short and sweet. I guess I went a little bit long, but that's how you do the trigger trades. I want to get out of this one because I don't want to own that many of these. Cancel order. And I got to keep that one because that's selling the other one. Yep. All right, well, that's James from the 10-Minute Trader, just showing you quickly how to do that. You want to get access to the software. You want to get these things emailed to you every day. Sign up. It's only $30 a month. I mean, hey, the information is well worth it. The books you're going to get, the software you're going to get access to, you know, be my guest. Jump on in and